From Barangaroo Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
Well, hello, and welcome to the COB. I'm Nadine Blaney, and I'm being joined today by Josh Gilbert from eToro. Hey, Josh, how are you doing today?
I'm good, thanks, Nadine. I'm a little bit sad England lost in the European Championship finals this morning. That was a tough wake up, but other than that, I'm doing okay, thank you.
Well, I wish I could banter with you about that one. I can't. I've got nothing to add, but I can banter with you about this market today. Josh, up above 8,000. It looks like we're going to comfortably settle above that milestone for the first time.
Yeah, it's definitely a nice win above that sort of 8,000 number. It sort of felt like we were sort of trying to crack that number all year. Obviously, we got a lot of thanks to the US for that. Obviously, that rate cut expectation sort of really coming through. You know, essentially now a rate cut basically nailed on for September. Market essentially fully pricing in now another cut by year end as well. So giving us a strong tailwind, every sector in the green today. So yeah, great start to the week all round.
Yeah, it's pretty incredible, isn't it? Because when you think about the US and those rate cut expectations hammered in for September, we still do have, Josh, a lot of key data to get through between now and then in terms of jobs, in terms of inflation. When you sit back and gauge what this data dependent Fed is relying on, I mean, are you a believer that they're going to be able to negotiate this slowdown in the economy without triggering recession?
Yeah, it's a tough one. I think our sort of our base macro view has been that we do see them sort of delivering a soft landing, which obviously drives home this expectation of, sort of rate cuts coming and sort of basically managing the US economy pretty well. And I think to be really honest, I think that so far Jerome Powell's done a pretty good job. It's definitely not easier being a central banker and certainly not being the governor of the Federal Reserve. And so far he's done a pretty good job. I think in terms of that data that you say we still have coming, so far, the data has continued to point towards, that rate cut coming in September. It supports that. Whether that continues to move in the same direction, that's to be seen. As you say, we've got some important data coming up. This week, we've got retail sales data. The week after next, I think we've got PCE inflation as well. So all of that is going to play a big part. Obviously, again, September is still a pretty fair distance away as well. July, obviously that meeting, we understand it's going to be a pause, but I think the key there is going to be around the commentary, what we hear from Jerome Powell. And even this week alone, we've got sort of more Fed speakers coming through as well. So it'll be interesting to see if their confidence is the same as what sort of the market's confidence is, to sort of see if they believe that this data is actually going in the direction that they're hoping it does ultimately.
Yeah. All right. Well, Josh, we'll be visiting those themes. Our key themes today, obviously, being that ASX milestone, stimulus hopes, because that China data did disappoint, and then proving that really anything can happen. Well, we saw that attempted assassination of Donald Trump over the weekend. So there is a bit of a Trump trade going on. Josh, maybe I'll get your thoughts on that one, because again, proving that anything can happen. You can have these black swan events. You can have anything happen from left field. It's done as expected in terms of sending people to safe havens like the US dollar, which in turn has put some pressure on oil and gold, for example. And then we've got this Bitcoin, rally today to go on. So, when you were thinking over the weekend after this happened, like where you were going to be looking for reaction today, have things gone to plan?
Yeah, I think so. I think it's sort of basically nailed on how we would have expected this to sort of play out. I think particularly on that Bitcoin front, absolutely, we had a fair bit of weakness, a fair bit of bad news sort of really over the last sort of couple of weeks and maybe months really for crypto assets. Donald Trump and the Republican Party are very much pro crypto. I think that they've started accepting sort of crypto assets as donations. He's going to be attending a crypto event pretty soon. Republicans have come out with a policy around sort of supporting crypto, supporting innovation in the sector as well. So I think we always expected to see that positivity come through in crypto markets today, particularly given that this has obviously impacted his re-election odds, very positively. Look, that is good in the short term. The odds have risen. It's good for him. We've obviously still got a long way to go until that election, so that can obviously change a fair bit, but it does definitely, add a lot of positives for him in the short term. I do think it adds a level of uncertainty as well. As you say, we've got that dollar higher today. US futures are sort of slightly up, but I think, it would be a sort of broader positive for sort of US markets if he is re-elected. But again, election season is always very uncertain at the best of times. So to have something like this thrown in the mix, is no surprise to see that sort of move to sort of the dollar as well. But I think it's played out exactly how we would have expected it to play out.
Yeah, and interesting that US futures for equity markets are higher as well. They have been throughout the day today. So we've got the Fed, obviously, which is the overarching driver of markets, and we saw that record finish yet again on Friday. We've got the uncertainty around the political situation, yes, but we seem to be coping with it as expected. And then you've got US earnings added into the mix. What was your take on the early earnings that came from the banks?
Yeah, I think really US banks have had a great start really to 2024. Any investor that sort of moved towards them on that sort of view of rate cut at the back of 2023, has been, rewarded ultimately. The stronger economy as well has really helped them, and this idea that they're going to have sort of a less restrictive regulatory, sort of segment. Ultimately, we heard that from Jerome Powell last week as well, but it was a bit of a break check on sort of Friday. Those stocks, as I say, priced for perfection ultimately, and they didn't really deliver to that sense. Wells Fargo, ultimately net interest income missed, profits dropped. Citigroup again posted a rise in profit, but sort of driven by cost cutting measures as well, more provisions for potential loan losses on that sort of potential of this weakening US economy that we have potentially coming through as well. And then JP Morgan, another profit drop there as well, and guidance sort of really didn't do a lot to sort of please the street. So I think that the broader takeaway is that those net interest margins are ultimately being squeezed at a time when we've obviously got sort of very high rates. The positive, I think, for heading into sort of this week's results, we've got the Bank of America, Goldman Sachs, and Morgan Stanley, particularly Goldman and Morgan. Those two banks are obviously very heavily focused on the investment side of the markets. And all three of those banks on Friday reported better investment banking, trading, asset management, and wealth management. And obviously, again, that's been helped by better M&A activity, more flurry of IPOs at the start of the year. And of course, the S&P 500 being on an absolute tear as well. So I think that's a bit of a positive coming into this week's results. But yeah, last week's started off on a bit of a sour note.
Yeah, when do some of I hate to say it, but the really interesting, results start to drop that give us some sort of an indication as to whether some of these US corporates have been able to maintain margins? Because of course that could come under pressure as we see the US economy slow, because it must to precipitate these interest rate cuts. Or the tech companies, like when does it get really fireworky?
I think the big name probably to watch this week, we've got Netflix towards the end of the week. Some of those other bigger names, that sort of really comes towards the end of the month, sort of towards the end of July. That's when you'll start to see your Microsofts, your Teslas, and those sort of big names come through. They all tend to report in the same week, all at the same time, usually on the same day, which makes it all exciting. But look, I think what we're sort of really looking for this time is we're probably going to see a slight earnings slowdown from that Magnificent Seven. Again, they have outperformed the market for a long time. They've driven this, run that we've had in the S&P 500. So we're still going to see, large double-digit growth, but we're not going to see the 65% growth that we've seen in sort of previous quarters. You're still going to get that weakness from the likes of Tesla, Apple, sort of maybe coming back to the party again. But it's going to be that AI sort of theme again that really drives it for us. Again, Nvidia will be the sort of standout name. Microsoft, Meta, Amazon, all sort of really coming to the party when it comes to AI, and also Apple really in that same sense as well as sort of come to the party. But I think a nice sort of lead into those names, we've got ASML, and Taiwan Semiconductor coming this week as well. So two huge chip companies, two names who are, massively involved with this sort of AI boom. So it's going to be a really good indication of whether the tech rally has legs going into the second half of the year, and might be sort of a nice starter for those tech names that we get towards the end of July.
Yeah. All right. Well, listen, it's we'll press pause on that one. But when it comes to Apple, I saw a chart today. I wish I would have thought to put it in our little podcast slash show here, Josh, the Vision Pro sales not going well at all for Apple. They're not moving many of those devices whatsoever. But let's just pause there in the US and take a look at our local tech sector, because, of course, the record finish on Wall Street did help boost these names. It had WiseTech Global, Zero, NextDC up by 1.5%, and Technology One up by 1.3%, and Megaport as well. So good day for the tech stocks here. Also, the retailers, even discretionary retailers not looking too bad. Lavisa up by 1.3%. And then we had the miners, so iron ore price rising, Fortescue up by close to 2%, BHP up by 0.9%. Josh, that data from China, that was pretty darn weak. So the story that we're seeing in the miners today, do you reckon that's just hopes of stimulus?
I think so. Yeah, I think whenever we've had sort of poor China data over the last 6 months, I think bad news has been good news for that local market, in the sense that it drives expectations that we're going to sort of see more stimulus. We had inflation data last week that I think already signaled that sort of was the case already. We saw rates unchanged today as well, which I think was expected going in. But there is a growing sort of view now that the PBOC are going to deliver a rate cut in September, sort of following along the Federal Reserve. And a lot of what's come from the PBOC, and the reason why they've kept rates on hold, is obviously because we've had such a weakening yuan, and that is, I think, one of the key drivers of why we've not seen a rate cut. But as we obviously get closer towards a Federal Reserve rate cut, may take a little bit of pressure off the yuan and give the PBOC a little bit of room to cut as well. So that's a positive. We obviously have as well key policymakers meeting in China this week as well, 4-day event. Again, that's not probably going to give us any short-term views. It's probably not going to be much there about stimulus. That's going to be more on sort of growth targets, longer term policies in that sense. But again, if they can lay out some sort of clearer plans for the future, I think it should bring some broader positivity. But the data that I think we clearly keep getting from China is just showing that we are needing more stimulus. The real estate sector is clearly struggling. Those production numbers are clearly quite low. We also get some interesting updates as well from the miners this week as well. We get production updates from quite a few miners. So BHP and Rio are in there as well. And I think the weakness that we've seen from those names, particularly BHP and Rio this year, are sort of attracting investors, I think, at a time when this stimulus package is maybe expected now from investors. Having a look back, I was having a look today at sort of the biggest increase from eToro investors in the second quarter, and BHP saw a 24% increase in Q2. So I think that what we are starting to see is that contrarian investor sort of come through when we do get that weakness, especially when they are such big companies, when they pay such strong dividend yields. And I think that we've had so much weakness in China over the last couple of years. I think investors are looking to say it won't drag on for too much longer, fingers crossed. But I think, today's data does certainly support the view that we should be getting a rate cut in September, and more stimulus is on the way.
Well, just to your point about miners here, I don't want to do your job for you, but the top 5 gainers on the eToro platform last week was Perseus Mining. Red 5 was in there, Emerald Resources as well. So 3 of the top 5 in that resources space. So Josh, some of the top corporate news today, we had Aussie Broadband shares tanking by 14%. I think it was a little bit of smoke and mirrors with Aussie Broadband because they're announcing this new product, Buddy Telco or something like that, but it lowered its earnings guidance for FY 2025. We had Lifestyle Communities following a news report that residents accused the company of immoral and unethical conduct. Bad press, never good for a share price. And Nanosonics was the best performer on the 200. At one point, it's expecting a sharp jump in revenue for the second half of the year. Josh, anything sort of stand out to you? Are any of those companies loved by the eToro client base?
I think the Aussie one probably stands out in the sense that they really tried to mention AI, I think, in their release today, but they should have mentioned it a few more times. The stock might have gone up maybe 15% instead of going
cynical.
down.
We're so cynical these days.
If they mentioned it a few more times, it might have been okay. But look, no, I think the key there was earnings guidance disappointed, even without sort of this new brand coming in. I think it was called Buddy, but even with that thrown in as well, it then affected earnings guidance sort of even more as well. So I think, look, that brand could be could be positive. Market wasn't impressed by that guidance. Looking at a low cost option, again, an AI type product where it's going to be sort of very consumer driven in the sense that you speak to a bot, you speak to AI, you don't need to speak to a human, therefore we can keep costs down. That is sort of the view, but we all know what it's like dealing with an AI bot at the best of times. Sometimes you just want a human. So again, we'll have to sort of wait to see how that comes out. But the story there was that the market just wasn't impressed by the earnings miss, and that sort of new product is obviously going to take some time to have an impact on profitability as well. And that comes after quite a lot of bad sort of news for Aussie broadband this year as well. They obviously had that Origin fallout as well a couple of months ago, and then Nanosonics as well. I think complete opposite to sort of Aussie broadband really. Early results showed that revenue for the full year should be estimates. Strong growth in North America, a pretty positive result there, 28% jump in their sort of deliveries on the Trophin footprint, which is one of their key products. Margin forecast was also positive. So again, that was an overall positive report, completely different to what we got from Aussie, and that was why the market was loving it today.
Yeah, well, that was the stock of the day. Let's take a listen to what our guests on the call had to say, Grady Wolf and Josh Barker.
We have a hold rating on them simply because a lot of their revenue forecast is for the inclusion of Chorus device, which is another device they have coming out that's actually not FDA approved just yet. So with that in mind, you can't really say what your revenues are going to be if that's not actually on the market yet. So that
that's
is priced
muddying
in.
the waters a bit.
It is a little bit, yeah.
Right.
So we've got a hold. It's a great company. They're operational. They're making money. But just until the Chorus device, which we're not expecting until the second half of this year, and then first sales to be in CY26.
Yeah, I think fundamentally it's moved from a sell to a hold at the moment. I think it's a, if you zoom back out, it's a really strong performer. It's faced a rough couple of years, but it could be the turning point for it right now. So not necessarily a buy just yet. Probably see a little bit more fundamental.
What about this new product?
Yeah, look, it's interesting. I like companies like that have product to market already, and then they have the pipeline of a very similar area.
So the existing salesperson who's already in the hospital has got the relationship.
Yeah, ability to execute and bring it to market as well. It's different from a company that hasn't brought a product to market yet as well. There's a lot more unknowns. So. I think it's a strong performer, but just for now, those risks look like they're turning, but at very early stages.
Okay.
Right, I'll just run us through some of these market leaders and laggards quickly, because I think we have touched upon a lot of them. Leaders today, Nanosonics, Block, Charter Hall, Seek, and Nickel Industries up by 3.6%. Laggards, though, well, it comes down to Lifestyle Communities, Imitemp, Bellevue Gold, Kelsian, and Liontown Resources. In the small to mid-cap space, well, we've got FBR, Fast Bricks, Core Lithium looking really good. Core Lithium up by 11.3%. And flipping the page to the laggards, we do have Big Tin Can down by 7.6%. Lots of questions over its corporate governance these days. And Biome did put out some results, but down by 7.6%. So Josh, when we take a look at what's happening overnight, we do get the U.S. Empire Manufacturing Index, and Fed Chair Powell speaks, along with, to your point, we get Mary Daly speaking. So we want to hear, as investors, from the Fed Chair and from these Fed speakers, Josh, just clarity on that September sort of timeline that's firming up in the market.
Yeah, look, it'd be nice to sort of get that from Powell, but I don't think we'll probably get that or from Mary Daly. I think ultimately, especially at the moment, if sort of they were to give an inch, the market will certainly take a mile. We've seen that a lot from the Fed and the markets over the last sort of year or so. I think Powell was a little bit more dovish, I think, than we expected last week. He sort of was very confident in leaning towards those rate cuts. Talking about the inflation had made good progress. There was good progress in the labor market. They were finding a better balance. He was confident that they were going to get back to that sort of 2% target. target, but he also said that they didn't need to get back to that 2% target for them to feel confident in sort of cutting rates, which I think that's what the market really took from last week. But also he had that tailwind of CPI as well. And I think when we hear from him this week, he'll be coming in with the confidence, knowing that we had a slowdown in housing costs, we had a slowdown in energy costs, and importantly, that sort of services inflation that slowed down. Ultimately that was the worry and what a lot of economists have been worrying about, and obviously we saw the slowest pace since 2021 as well. So I think a lot of positives for him to sort of come in this week. Again, I'm not sure he's going to sort of give too much away, but I think at this point it's hard for him to not sound dovish, to not be positive by the data that they're receiving. And I think markets will certainly get a boost from that this week. And we'll probably continue to see that rotation trade happen. We obviously saw that last week and move out of sort of the mega cap tech stocks into your real estate, your utilities. It was nice to see the rest of the market getting some love. The Russell 2000 up about 6%. So we broadened away from the Magnificent Seven, which was quite nice to see.
Yeah, I mean, because we talk about them along with interest rates quite a lot, Josh. Okay, tomorrow here we get Hub24's quarterly update. We'll be speaking with Hub24 from 3 p.m. onwards. We've got Metcash trading ex-dividend. We got a bit of activity data out of Japan, but nothing here locally. It's a pretty quiet week on the economic front. So Josh, look, I'll just walk our viewers through the final figure for this S&P ASX 200 sitting at 8,017, let's call it 18, up by 0.75%. So after hitting a high, we still do have E-minis in the US, NASDAQ, and S&P 500 E-minis mildly positive. Bit of pressure coming through in Chinese markets right now. And of course, we'll keep our eye. Is there a big football game tonight, Josh?
No, it's all done now. So England are unfortunately out. We had the Copa America game on today, so Argentina took that as well. But no, football is unfortunately not coming home this time around. So
I'm sorry about your loss. But look, it was really fun to have you join me as a guest host today. Really appreciate your time. Welcome anytime.
Thank you very much, Nadine. It was a pleasure.
Josh Gilbert there joining us from eToro. Look, if you would like to catch up on anything that you may have missed today, do so online, ausbiz.com.au. We'd love it if you could tell your friends about us and also complete a review of this podcast. And you can do so via your podcast platform. I think you can just scroll down if this is how you're choosing to consume this content. Look, we look forward to seeing you tomorrow. In the meantime, stay safe, stay happy, stay healthy. We'll see you then.